Hi guys, so in this video we're looking at the purchase of an asset with a deposit. Now everything we do from here on pretty much, there's going to be GST involved in it in some way. Almost every transaction buying and selling is going to have GST. There's a few small exceptions here, but let's assume GST for any purchase, so that's going to be a complicating factor with this question. Let's take a look at it and see how we go. So here's our question. Someone bought equipment for $20,000. They put down a $4,000 deposit, and the rest is payable in 60 days. So they're going to pay $4,000 in cash, and the rest, $16,000, they're going to pay in or before 60 days is up. Now, the complicating factor here is GST. So the first step here is to calculate GST. And remember that GST is equal to the sale price divided by 11. Now that's going to be 20,000 divided by 11. Now this is not going to work out neatly. I've already done it on my calculator. It comes to $1,818.18, and it continues on forever. So we're going to round it to $1,818.18 in GST payable. So the GST is $1,818.18, which means that the actual price of the equipment must be $20,000 minus that. Price of equipment is equal to $18,181.82. Okay, so there's lots of ones and eights everywhere, but hopefully you understand what's going on. The value of the equipment is this. The GST payable is this. Okay, that's important. Value of the equipment, GST payable. Let's do our general ledger and you can see where we go to from here. Let's not confuse matters. Let's do our general journal and see how we go. Okay, so we're going to do our general journal here. First column, date. Silly, I didn't put a date on here. But let's use the same date we always seem to use in these examples, the 1st of the 7th. Now, particulars. What accounts have been altered here? Lots. Now, the equipment has gone, so one of the accounts that's happened is the equipment has gone up. Okay, so the equipment account has gone up, that's an asset. What else? Well, our bank account went down. Because our bank account, which is an asset, went down because we paid a $4,000 deposit. So there's two accounts. What other accounts? The rest is payable in 60 days. So an account's payable went down. We need a name. So bought equipment from Bob. Okay, so accounts payable Bob. Now accounts payable is a liability, and this liability has gone up. And finally, there is a fourth account here, the GST clearing account. Okay, now remember that the GST clearing account is a liability. It's a liability that you owe to the ATO, to the Australian Tax Office. But this transaction is you paying GST to someone else. So we get a GST credit. Now that's confusing because we get credit. What it means, though, is our liability to the ATO is going down because we paid GST to someone else, and they're going to give that GST to the ATO. Okay, so our GST clearing account, which is a liability account, has gone down. Ooh. 4 accounts. Now, let's take a look at what's getting debited and what's getting credited. The equipment account is an asset going up. That's going to be a debit. The bank is an asset going down. That's going to be a credit. Accounts payable is an asset going. Accounts payable is a liability going up. That's going to be a credit. And GST clearing account is a liability going down. So that's going to be a debit. Okay, let's do all of this stuff now. We need to do our debits first, and then our credits. So, particulars, equipment. Equipment has gone up, so it's a debit. The value of our equipment is this, $1,881.82. What else? GST clearing account got debited because it's a liability going down. So GST clearing account by this much, because that's the GST that we pay. 181818. Now the other two, credits. Now our bank has gone down by $4,000 because we paid a $4,000 deposit, and our accounts payable to Bob. Sorry, I know that's not very legible. Our accounts payable to Bob has gone up. It's a liability. So it's a liability going up of $16,000. Okay, this is going to look terrifying to a lot of us because it's probably the first time where we've had these debits and credits where the numbers just don't match up neatly. But if you add those two numbers together and you add those two numbers together, you'll get 20,000 on the left, 20,000 on the right. Our equipment, the value of this, our GST clearing account, we paid this much GST when we purchased the product. Our bank account has gone down by 4,000 because that was the deposit, and our accounts payable has gone up, it's a liability, by 16,000. Don't forget, a lot of us need to remember our journalism transaction. Bought equipment, paid $4,000 deposit. I should probably put the value of the equipment in. Bought equipment, $20,000, paid $4,000 deposit, if you can't read that. Okay. There's a lot going on here. So you really need to practice these. You really need to take your time with it. But this GST clearing account is going to be something that you get very familiar with because it's going to be a lot of it. So practice, practice, practice. Take some notes and then do some questions. All right. Thanks, guys. That's the purchase of an asset with a deposit with GST.